So in the previous lecture, we went through the asset section of our baguette company. Now we're going to take a look at the liabilities, that various accounts that we can deem as liabilities. Let's look at the current liabilities first. We have an income taxes payable. Now, that will always be a current liability because the government wants their money in the current year. So we'll make sure and put that as a current liability. We also have a current liability of accounts payable. That will be included along with, I see here we have wages payable. Probably this was some accrual. The payroll probably happens at the beginning of the first week of January. And so this is the amount of salaries that were paid at the end of 2013. So we're going to include those for our current liabilities. And then when we look further onto our long-term liabilities, we're going to see some notes payable here due in 2016, definitely a long-term liability. And then we've got our bonds payable, and we also will show a premium on the bonds payable that will be included in this long-term liability section. So we've got the notes payable, premium, and the bonds payable for our long-term liability section. So let's start with the liability section. I'm going to show liabilities here. We'll start again with the most liquid liabilities, those that need to be paid in the current year. So current liabilities, from there we'll take our accounts payable. And those accounts payable were, let me just confirm it, $13,100. And then after that, this is when we'll deal with our income taxes payable of $3,800, and then our wages payable of $1,400. So after we have completed that section, we will total our current liabilities and move on to the long-term liability section. Remember, long-term liabilities are resources we owe that the payment extends beyond the current year. The current portion of these long-term liabilities would be put in the current liability section. So if we go back here and look at our long-term liabilities, I see a bonds payable of $23,000. We also have a premium on bonds payable of $1,400, and then our notes payable due in 2016 for $6,000. So our bonds payable due 2020 begins at $23,000. Our premium on bonds payable includes $1,400 to show our total bonds payable here of the $24,400. We've got then our notes payable of $6,000. In addition to our notes payable, we will also have an other liability shown on the books as advances from customers long-term for $2,600. Generally, advances from customers are considered short-term or current liabilities. In this case, it stresses that these advances are long-term. So we will want to add another section to the liability section called Other Liabilities, where we bring in the long-term section of $2,600. After that, we'll total our current, our long-term liabilities, and then our other liabilities for a total liabilities here of $51,300. To This probably for most of you will be the most difficult section of the balance sheet. We're going to start with our contributed capital, similar as we did in the exercise 3, where we'll start with our preferred stock at the $100 par for $18,600. Then we will have our common stock at $10 par for $2,700. Next, let's take a look at this. We have the additional paid-in capital on preferred of $7,900, and we also have additional paid-in capital on common of $9,300. So we will add to that additional paid-in capital preferred of $7,900 and additional paid-in capital on common, which will be $9,300. So our total contributed capital will list as $48,500. The next portion is to add our retained earnings. This is also where we would put in our other comprehensive income. We don't have any, so our retained earnings is showing at $18,300. And then our total stockholders' equity section, let me just put that one over here, 18.3. Our total stockholders' equity section is a total of $36,000. No, that's not right. What am I missing? 18.3. Well, because my contributed capital was incorrect here. 48. So that would make more sense. The shareholders' equity section here is 66.8. Now we will total liabilities and stockholders' equity, which will be a combination. Now this will be a combination of our stockholders' equity and our total liabilities, which is at $51,300. So if we combine those, we have a total of $118,100. And as you can see here, our total assets are $118,100. Now, the next piece of this we're going to handle in the next class. Right now, we're going to focus on a certain aspect of this chapter related to the ratios and the various types of ratios. We're going to deal with that next week.